When I listen to crypto bros talk about real estate, I realize I've entered Dante's eighth circle of hell. The reference I'm referring to isn't from Dante's Inferno. It's actually from the Divine Comedy. And what it means is there's different levels, these circles of hell, and the closer you get to the center, in the center you have the fiery pit with Satan in it himself. Well, the eighth circle is pretty darn close to the middle, and that one is reserved for fraud. Welcome to the Blockchain Real Estate channel, you guys. My name's Brian Johnson. I'm a real estate broker, so everything I talk about on this channel when I'm talking about blockchain and real estate comes from a real estate broker's perspective. I do love crypto. I'm involved in the space. But realize when you're talking about real estate and it's crypto bros talking about real estate, they mostly don't even know what they're talking about. You're not going to be 1000xing your profits in real estate overnight. That's just not how it works. In today's video, we're talking about Metropoly. This is a new platform that's launching now. It first hit my radar about 6 months ago when they started putting out a few YouTube videos by this broker up in Canada. And I watched those and I was watching and thinking, okay, I like what they're talking about on launching this marketplace. So let's kind of sit back and see what happens. Well, over the last few weeks, they've launched the pre-sale of their token. And we're going to talk a little bit about that. I'm going to show you the marketplace. Now, I'm going to be pretty hard on it here, you guys, and I'm going to tell you the problems I see with this. But at the end of the video, I'm also going to show you a way that I think you can profit from Metropoly if you want to participate in this space. So stay tuned for that. So my real problem with these crypto bros that are telling you about these platforms is basically what they do is they launch the webpage and they just read to you the ad copy of the webpage as if that was a reason to join it. Don't trust the ad copy of web pages, dig into the details. So this is the front page of their pre-sale website right now. Everything you see on here is fake, as in the numbers. They don't have any properties listed that you can participate in right now. It's all in beta. What they're doing right now is they're launching their pre-sale is launching their token. It's called Metro. You can buy it on Uniswap. There's not a lot of liquidity going on right now, but there is some movement in the market. We'll go into that in just a second. The first thing I wanted to mention is they're very proud in some of their documents that they say their team is fully doxed. Well, when you look on their webpage right here, you can see there's six members of their team are somewhat doxed. But when you go to each one of their LinkedIn profiles, not one of them mentions Metropoly, not one. I think what they are is just some freelancers that have lent their time to it. The brokers on here aren't super experienced either. So when they say their whole team is totally doxed, I question that because no one on their team is mentioning that they're involved. Now, let me just kind of sum up quickly what they're doing here with the Metropoly. And it's a little bit different than some of the others I've talked about, like Lofty and Arrived. So with Metropoly, what they're doing is Metropoly is they themselves are buying and purchasing and owning this real estate. Now, they're going to be purchasing these worldwide, not just in the U.S. market. In fact, I bet you it's going to be outside the U.S. market for most of their properties. So then what they are going to do is they're going to take the property that they own, they're going to tokenize it and issue NFTs backed by a promissory note against that property. So that when you own, let's say, a $100 NFT of a house in Dubai, there's a promissory note on the smart contract that says that enforces basically your ownership of the NFT. They say you have, full ownership rights, investment, the benefits of ownership in these properties, but there's not a chance in hell that the IRS is going to recognize depreciation, trying to claim depreciation against an NFT backed by a promissory note on a vacation home in Dubai. So you don't really have all of the, all the benefits of real estate ownership with this platform because you don't have depreciation. There's not a chance you're going to have depreciation. I'd love to see how they would build that in. I don't see that happening. I think they're just going on some basic economics of basically by owning this NFT, you have the rights to the appreciation value, and then you have a right to the distribution of the rents. Now, I like that as a concept in tokenized real estate. That's what's coming down the pike really fast. We're seeing platforms launching with that right now, and actually there's platforms operating with that right now. So I do like that. Now, one thing they're doing differently here with Metropoly is issuing it as an NFT against the property. So that's different. When you look at Arrived or when you look at again, Lofty, they're not issuing an NFT, though on Lofty, they are a tokenized real estate. So that's something that I think is super cool about Metropoly. In fact, I'm going to go through their list of things that they're offering on their platform in a second, and I really like that. So when it launches, this is what the marketplace they say is going to look like. I like it. I like you have a dashboard, you have an inbox on the left, of course, your settings, and then marketplace, which is what we're looking at here. Upcoming properties, I assume this is going to be, and then auctions, mortgages. Interesting. I like this layout. I like what they're showing on these properties here. Let's click into one. So, I mean, this is all speculative, you guys. This is a beta test. None of these are real. They're just guessing right here. So, like, this is what they want to do, is offer things like a 5-bedroom villa with an incredible view. With a $5.2 million purchase price, they say a dividend yield of 7.79%, a 5-year expected return of 14. Okay, let's just stop, you guys. This is total pie in the sky bullshit right here. They are just making this stuff up. Because further in their documentation, when you look on their white paper, they're expecting a whole different result on yield. But I do like this, you guys. I like the layout. I like the way you can look at how much you can earn with the property. I like the overview of the property down here. Financial details, again, this is a beta with just made up stuff, but I do like seeing these numbers here. I like seeing the title search, title insurance fees, all these fees going down here. I want to know these, the broker fees. How much are they putting into renovations? Metropoly says they're taking the 1.5% purchase fee. It's going to be more than that. But it gives you an acquisition cost, the number of NFTs that are going to be minted against the property, the value of the NFTs, the mint price per NFT. This one looks like they're going for an expensive $4,500 to a $5,000 one. In their other documentation, they're talking about basically making it accessible to everyone for $100 or less, or $100 per token. So we'll see how they break out when they do launch this per property. Now, when you look at their white paper, and I have it right here, it's a lot of fluff, of course, like what you would expect. Basically a lot of sales copy, but there is some really good information to get out of it. So pretty much my favorite part of the NFT is a lot of hopium of what's going to come. And if they do build it like this, I'm going to be very impressed with what's available. So this is what they're saying in their white paper. Buy real estate NFTs and receive monthly rental income. Awesome. Sell real estate NFTs on our 24/7 active marketplace. Awesome. Auction a real estate NFT and get the best possible offer for your property. That's interesting. I love that. Trade NFTs with ease, similar to trading shares in the stock. Borrow against your NFTs instantly. Transfer ownership and move in. This means if you bought all the NFTs of a property, they'll transfer the ownership of the home to you and get rid of the NFTs and just give you title. Decision rights. If the majority owner of real estate and NFTs decide to sell the property, they will list it and sell the property. That means they're letting the NFT holders vote on what you want to do with the property. I love that. So what I really like here, and this is what I see for the future of real estate tokenization, and I think these guys are starting into it, and that is the ability to take your tokenized real estate. Let's say I buy a $300 of NFTs on a piece of real estate in Scottsdale, Arizona. Let's say I bought one NFT and it was it's $300. Let's just give that as the basic number. Well, what's going to happen with that over the next few years? Maybe you're going to grow in appreciation. You'll receive some rents on the side. But the idea of trading this as an NFT on the marketplace is huge. When you can trade that NFT on something like OpenSea and create a real secondary market for real estate NFTs, you're going to get a 20 to 30% liquidity bump in these properties just because of the trade value. So here's how it works with investors. If you have a property you're selling for $20 million, big time investors, big money investors coming in, they're going to want a very high return on their dollar for that. They're going to look for a pretty high return on their dollar. That's because only a few investors can purchase at $10 or $20 million. But let's say that $20 million investment was opened up and everyone can invest for $100 and buy little chunks of it. So Sally, the nurse down the street, can participate. And, Juan in Mexico that is a gardener, he can participate. And someone in Japan, they can participate and all of that. Those people, when they invest, don't necessarily don't require that same high return. They'll accept a much lower cap rate or a much lower return on their investment. So that ends up boosting the prices of the property. I like that. So look at this right here. This paragraph, I think they're being the most honest on what your benefits are as an NFT holder. Benefits of an NFT owner: passive income through monthly dividends, potential appreciation of the asset value, possibility to borrow against the NFT, possibility to auction the NFT, and possibility to sell the NFT. Investors will not own the property and the owner remains the Metropoly Ltd or a partner company, unless a user buys all fractions of the real estate and decides to burn the NFT and transfer ownership. So that's really the benefits. To call it the bundle of rights to your NFT. In real estate, you have what's called a bundle of rights in the United States. You don't have those same bundle of rights with an NFT, but what they're saying, here are the rights of what you can do with it. And I think the trading and auctioning part of the NFT is what's going to be huge. Now, here's another part where I think they're being most honest again, and that's where they're stating what your annualized returns are you can expect, and they're expecting between 3 and 10% annualized returns. That's not that great, you guys. For the risk that you're taking without owning the property, 3 to 10% on these, I don't think that's so great just to buy it and sit back and hold that with the risks involved. Not necessarily as that being the strategy. One thing, again, they mentioned in here, I won't go into it very much, but they do mention it, and I can expect this coming, all of us real estate junkies out there, and that is going to be virtual real estate and metaverse real estate. I think if they can bring those into the trading platform, again, that's a great thing for volume. It's a great thing for the utility token to be burning and paying fees. Though I think their utility token, the Metro right now, I wouldn't be pumping a lot of money into that as an investor. I would sit back on that. I think you might have lost your opportunity with that. In fact, I don't think there was necessarily an opportunity. They launched it just a few weeks ago and the price has been going down. I think maybe some people might have been dumping some of their tokens right when they bought it really cheap and it pumped a little bit. I don't know, but it's not going up in price. Utility tokens, everyone thinks they're going to go, 1,000x and all that. Maybe they will. I don't know. You remember if these utility tokens become too expensive and that becomes the fees for the platform, then it's hard to trade those NFTs. But they're going to be holding back a lot of tokens of the Metro token, the company is. And so they have a huge opportunity to be, increasing the supply constantly to keep those fees down, which is going to keep the Metro token price down. One thing you want to watch out for on all of these platforms is going to be the fees. Those are going to be huge and they can completely ruin any profit you're expecting from any real estate. And they have a lot, not these guys, but there's a lot of ways in real estate to hide a lot of fees. Maybe they're taking money on the back from brokers, or they're taking money from property management companies. I'm not accusing anyone here on that. I'm just saying in real estate, there's a lot of ways people can be extracting fees from a deal that inflate the price of that deal, but you don't necessarily see those as fees. One thing they have is a 1.5% exit fee. Fair enough, that sounds like a listing fee, but they also say that if they sell it above an agreed market price or an agreed valuation, they can take 25% of that also. Well, what does that even mean? As a broker, I can tell you that can be really scammy. So the thing I don't like about this 1.5% exit fee, and they have the same formulation as a 1.5% fee when you buy a property that they take as a brokerage fee. Let's look at it as the exit fee. So here's this is what I don't like. They say they would get an independent valuation of the property. So let's take $1 million property that you own the token on, and it sells for $1 million. Well, what they are going to do is they're going to go get an independent valuation that does not say licensed appraiser. And these are in different countries. So how are they going to get independent valuations in all these different countries? I mean, do I trust an independent valuation guy in Dubai? If he's a licensed appraiser, maybe. I don't know anything about foreign investments in real estate. So here's what I see is not the scam, but how they can inflate their fees. The property sells for $1 million, but they go get an independent valuation that says, well, the independent valuation says it's worth $950,000, but we sold it for $1 million, and so we're going to take 25% of that $50,000. That's a problem. That's a real problem, because if you sell it for $1 million, then that's the market valuation. It's not what someone says it's worth at, for a little bit less. The property's worth what someone's willing to buy it for. That establishes the market value. If someone says, I'll buy that property for $1 million, you can't turn around and say, well, we have this valuation over here at $950 or some number like that, and we happen to go get $1 million. Buyers aren't buying properties over market value. The buyer, when they buy a property, establishes the market value. Now, they have the same script on the purchase side. Meaning, if they buy it a little bit under value, then they're going to also take 25% of that supposed gain because they got a good deal on it. I don't trust that at all. And I think that right there is where they're going to make a lot of their fees, and you got to watch out. That's what I don't like about these platforms right now, is the fee structures. Now, I don't want to completely knock it and say, don't look at this and don't participate. The way I see that you can make money on these platforms coming up is in the auction and being able to sell tokens in other marketplaces. So one thing, if they allow this, they say the tokens are, once they hit the market and the property is trading tokens, I would be putting buy prices to buy tokens under value and just let those sit there. People are always looking to dump cheap things. So people have a few $100s in tokens. They get bored with the platform. They want to move on. Someone like that might take a 20, 30% discount just to get like a little bit of cash out and move on to something else. It's not the same as someone's invested $1 million. This is small dollar investors, you guys. And when that happens, those people are willing to take a discount just to get out. I would be putting buy orders on tokens below market. And then the second they're purchased, I would turn around and put them back on that marketplace a little above market and just churn it like that, using that as the auction system. Once they launch these as NFTs that are being able to be sold on something like OpenSea, that opens it up quite a bit. And I would look at trading those tokens in the same way that I was just talking about, buying them cheap from people that want to dump them and selling them and liquidating them on the bigger market. Now, if you want to watch a video, you guys, about a platform that is also doing this in the US with decent fees and a good structure, look here and watch my review of Lofty. If you're looking for a platform that you can invest in houses in the US as a hard money lender secured by real estate, getting a pretty good 10% average fee, then watch this video right here on Groundfloor. That's a great opportunity also.